We got Sid from Bima.money. Tell us a little bit about yourself.
My journey into crypto was when Bitcoin's all-time high was 18K. So that was in 2018. And my peers wanted to buy Bitcoin. I wanted to build it. If you want to be an early stage project that is backed by a fund, you want to make sure that you have follow-on funding guaranteed. So I wanted to build my own company. My first company completely flopped. And
I think it just comes down to having a plan, executing it, incentivizing correctly from a points perspective. And we don't see enough of that. So in terms of Bima and what you guys have obviously achieved, tell us about kind of like the business side of things.
one thing that I think is the most important thing for a crypto product.
Blockmates Orange is sponsored by Core Network, the ultimate Bitcoin-powered EVM-compatible blockchain. Learn more about Core at blockmates.com.
Welcome back, everyone. Another episode of a Blockmates Orange. We got Sid from Bima.money. Stablecoins. We know that stablecoins in a DeFi context are super important, but they're doing something slightly different. It's a Bitcoin-Collateralized stablecoin. Within the context of Bitcoin DeFi. Sid, welcome. Bima, it's good to have you, sir. Thank you for joining us.
Thanks so much, Jedi. I really appreciate it. Thank you so much for having me here. And thank you for the core team for helping me set this up as well. I really appreciate it.
Today's podcast is sponsored by Glyph. Glyph is a non-custodial decentralized exchange operating on the Core Network. As you know, we've spent a lot of time focusing on Bitcoin DeFi on this podcast, and essentially what Glyph is doing is replicating what Uniswap has done on Ethereum. So they are obviously dedicated in developing a sustainable and innovative DEX on top of Bitcoin, much like Uniswap, and just taking this whole Bitcoin narrative to the next level. So they've got a unique non-custodial approach which allows users to retain ownership of their Bitcoin while enjoying the benefits of a decentralized exchange experience. Their website is glyph.exchange, and you can go and trade a variety of assets there like BTC, USDT, USDC, and a lot more. Go check them out. Yeah, awesome, man. It's a pleasure to have you. And yeah, I mean, obviously wanting to get into, in my opinion, probably one of the most important aspects of DeFi and crypto in general, and that's stable coins. But before we dive into that, tell us a little bit about yourself, your journey into crypto, and how the hell did you land up right here, right now?
Yeah. So my journey into crypto was when Bitcoin's all-time high was 18K. So that was in 2018. It's pretty funny, now feels like 18K was just like yesterday,
Yeah.
But my first foray was into sort of that sort of Bitcoin pricing. And my peers wanted to buy Bitcoin. I wanted to build it because I thought the technology was so much more interesting. And I fell in love with it a lot more then. That's not to say that I didn't do my own sort of, stints trading here and there. So I worked on engineering teams for a lot of the top sort of blockchain protocols. I worked for FalconX. I worked for Alchemy. I worked for, Casper Labs, different types of companies with different types of thesis, with a different thesis in space. Ended up working at Apollo on Wall Street, and eventually, came to the doors of the guy that has, probably, one of the coolest stories with Bitcoin, which is Tim Draper's house of funds. And basically, I spent a summer, as his sort of, as this sort of like a really, sort of close together internship under his wing. He was a really great mentor. Towards the end of that summer, I had come up with an idea to make a co-investment fund with Tim. He was super rampant about investing and co-investing in a huge network of funds. He's an LP in tons of funds across the world, and I just thought it made so much sense that, listen, if you want to be an early stage project that is backed by a fund, you want to make sure that you have follow-on funding guaranteed. That's something that you want to make sure that you have. So yeah, you could burn through the runway in this round, but the next round you need to have some degree of support. So that's when I ran the Draper Roundtable. It was a co-investment fund and sort of network of syndicates. We ran SPVs and ran different types of co-investment, sort of allocations as well. From there, I that got merged into Draper Associates around this time last year. Prior to Tim, I wanted to build my own company. My first company completely flopped. My first company flopped. It was, I was trying to build a Web 2 NFT company. on paper it sounded nice, but it was on paper in like 2022, which when everything sounded nice, of
I
course.
think there was
But
data back then.
yeah, it was a lot of hype. This is when OpenSea was having 100 million in fees, and then they went down to like 100,000 in fees or something like that. It was a huge, like 90% drop because just people just kind of done. It was we're kind of done with the fluff. But I think for the most part, I had a chip on my shoulder going into my next company. I ended up building an EVM on Rust. This is post Aurora on Near, but pre this L2 craze. Um, I thought of it really as an emulator. I can, just like how you can port Mac OS onto Windows and vice versa. Doing the same exact thing with Ethereum and these different types of WASM chains. I ended up getting that acquired by Casper Labs, which turned into Prove AI, which is now under Hedera. So it turduckened its way into Hedera somewhere. But I was very happy that I got a chance to sort of get that opportunity. I think after the fund was merged into Draper Associates, I was trying to figure out what I did next. I had known Sriram from Eigenlayer for quite some time, and I was trying to build a stablecoin backed by the AVS systems in Eigenlayer. But there was so much more with the Bitcoin system, and I was just catching wind of all these L2s that were coming out, and I was like, why is there such a resurgence of Bitcoin? And then I learned about BitVM and OpCat and all of these different types of programmability unlocks and Taproot right at the Bitcoin level. And I was amazed. I was actually in Vegas, and I was with Tim. He took us all for an offsite. He gave everybody $100 to go out and gamble. And I think the main premise, from what I understood, was: listen, I've chatted with him endless amounts of times, but I never ever had the chance to talk to him about his Bitcoin holdings. For as long as I've known him, I've never had a chance to talk about his Bitcoin holdings. So I asked him, Tim, did you liquidate your Bitcoin to finance this trip? I was a joke, right? And he said, no. And I was like, he said that a little too fast. I was like, okay, so maybe this is from your venture returns. Have you ever liquidated your Bitcoin, Tim? No, never. He used to give startups Bitcoin back in the day as an investment. And the SEC told him he couldn't do that, so he stopped doing that. So I started asking him, like, Tim, why have you not ever, you think of Jeff Bezos and Elon Musk, they have some degree of liquidation and runway off their net worth because they put up their stocks and shares of these public companies and private companies up for collateral for lending. And they don't have to pay tax. They don't have to even give away custody outright of their shares. So I asked him, Tim, have you done something like this with Bitcoin? Have you ever borrowed against your Bitcoin before? And then that's the first sort of glimpse I saw that he was like, I've never done that, but I wouldn't go through a centralized institution to do it. And that's when I thought that this is what makes sense to build, because there's so many people out there, miners, people with Bitcoin, people with just a wealth of asset of this digital gold that are trying to find a way to liquidate, and they don't want to liquidate, they don't want to bridge, they don't want to KYC, they just want to do it in a seamless, trustless manner that they could borrow against their Bitcoin and be enabled to use that borrowing in some way, shape, or form, whether it's yield, whether it's utility, whether it's payments, whatever it is. So that's where the birth for this idea and Bima came along.
Wow. I wasn't expecting a colorful history like that. So clearly you've done, but fascinating nonetheless. I mean, it's like you've obviously done your time. You've proven you can get it wrong, and more importantly, you've proven that you can get it right, which is super cool. Great story. So what does Bima do exactly? Give us a blow by blow. In light of what you just told us, I'm sure it's going to be a lot more than just a one time thing. So give it to us.
Yeah. The simplest is you could borrow against your Bitcoin. That's the simplest. But the higher level, of course, is we're building a CDP model, an over collateralized debt position model on Bitcoin, similar to the Prismas, the MakerDAOs, and the Liquidities of the world, that enable you to use those stable coins in some degree. Whether, when I look at an economy, I see that the best companies in the world, they have an exterior and an interior motive. Facebook on the exterior is a social app. Interior, it's an ad engine. Robinhood on the exterior is a fee-free trading app. On the interior, it's a data packaging service for alternative data for hedge funds. For us, on the exterior, we're building a Bitcoin-backed stablecoin, but on the interior, we're building a Bitcoin-backed economy. And I think there are three pillars to an economy: it's lending, borrowing, it's currency exchange, it's yield. And what we're doing is we're enabling all three of those kinds of possibilities within this sort of a stable. I think when you have, like, you look at Tether, you look at USDC, you look at all the incumbents, their tech isn't like, the most groundbreaking ZK software that's out there. It's not groundbreaking. I think one thing that's there that is really of key and note is the tech in these situations is almost always sort of non-differentiated. What makes the tech amazing is actually only as good as the team. And we have a wonderful, fantastic team. But the biggest thing we want to focus on is the tech is really more like a solution engineering kind of thing, rather than we're building the next, Death Star. So I think our real focus is that we go to wherever the Bitcoin liquidity exists and enable people to sort of, without liquidating your Bitcoin in a non-custodial manner, borrow against it and earn yield. So we have a few products that are coming out. Number one is a lending borrowing module. Number two is a structured products module. And number three, down the road, you're going to see a currency exchange module. There's a big de-dollarization that's happening. I think people are going to want to resort to assets that can be backed by Bitcoin, just in the same way that many people have wanted to put themselves on the gold standard. So enabling that different types of trustless currency is really what we do. We want people to be able to build economies and use cases from these stable assets, whether it's on Bitcoin itself, we build on the L1 itself, or if it's EVMs, Solana, Stacks, Move, we don't care what the programmability is. We go to where the liquidity is. And that's really what we do.
So are you effectively competing with the likes of the Aves?
I would say that we are collaborating with the likes of Aves, and there's a good bootstrapping component to this because we can't really hit the scale and demand that Aave has. Of course
Yeah.
not. I think our real focus is that we want to kind of build a stable that can be lent and borrowed in the most simplest mechanism and format with Morpho. And as we scale to those degrees of success, that's when we sort of do what Athena's done recently. We integrate with Aave. So it's just bootstrapping for right now. And at scale, we'd work with the incumbents like Aave.
Okay, nice. So obviously, from a business model perspective, it's definitely a crossover. I know that you, in your kind of like your one liner, you describe yourselves as being omni-chain. So does that mean that you operate kind of like from not necessarily a centralized point of reference, but do you have kind of like a preferred chain that you are kind of like at home with, and then you kind of split out your resources from that point, or are you guys planning to be on multiple chains?
Yeah, I think while we'll start with an initial subset of chains, I can tell you, one chain that we've come to love and adore is Core. Core has been incredible in terms of support. And I think if you look at them in terms of TVL, the network, the bandwidth, the ideology they have with emulating MicroStrategy and dual staking, it's wonderful. It's lovely. And I think Core has been one of the sort of places that we are very, very fond of calling home. That's not to say that we don't achieve PMF on other chains. I think liquidity, especially in this L2 war, liquidity is everywhere. It benefits projects like mine. The dumbest thing you can do is say, oh, what is your programming language on this chain? Oh, it's Move. Oh, it's Rust. Oh, dude, I'm only an EVM developer. Like, come on, dude, if there was $1 billion behind a door, you break down the door to get it. And that's something that we sort of focus on. So we'll have an initial subset of 7 chains. You're going to look at Core, your bit layers, your Merlins, your move-based chains, and a few more that really have acquiesced to the majority of this Bitcoin mindshare that we're really trying to enable within these different types of products. Because we want people to be able to create an economy out of the Bitcoin in whatever liquidity form it exists, whether it's at its purest, with native Bitcoin, or whether it's at its wrapped value with an LST or a wrapped, with a BitGo, or if it's LRT. We want these kinds of blue chip Bitcoin assets that people can use to their own benefit. So Core has been one of the biggest partners for us in that. We're going to be part of their ignition program. And one of the most important things that they're doing is really helping us kind of achieve that scale with the majority of their other protocols, the lending modules and other protocols. And you asked a very important question was, am I competing with Aave? No. The answer to that question is Aave on core. Not yet. Get on those core. I think the biggest thing is, they have this whole governance component, which kind of limits us. So if we need to go for a lending module, it's hard to find utility in other chains, but the liquidity is there. So I think being a sort of, I like to call it like an RV. An RV is a place you can live, you can sleep, you can eat, you can drive, you can move, you can rest, whatever. That's what we are. We're really like an RV. We want to go to these different chains and ecosystems and kind of set up shop. And at scale, then we can park it in a car park. Then we can go back home. Then we can give it back. We scale that more depending on the chain. But so many of these ecosystems are so nascent, some of them don't even have some of these attributes. And they have so much liquidity. But you need to give a use case for that. So Core has done the best of the bunch, I think, just due to the fact that they have a tremendous degree of support, community, product development, and just an ecosystem that we are working with almost every single Core ecosystem partner that they have on the BTC-Fi side. So I would say that ecosystems like that are what we like. And then from there, we go everywhere. We start with 7, we go to 70. So that's really the biggest thing we like.
Great. How do you guys, from a product market fit, kind of like sell the idea that rather use our product over something like USDT and USDC?
You have to give up your custody for USDC and USDT of any of your assets. That's the first thing. You do not have to do that with us. You own, you hold it in your non-custodial vaults. The second component that's there is look at the rates that they're offering. I think competitive yields are a very hard thing to get in a sustainable fashion. We've chosen that, listen, we don't want to go for like ridiculous 30% APYs that are unsustainable and will be just dried up by next year. That's not how we should do it. I would rather focus within that sort of how can we get a sustainable, 8 to 10, from there to maybe a 10 to 20, and create different strategies for people to use their stablecoins with. Our product market fit is that, well, stablecoins have just innately always had a product market fit, especially in an ecosystem that is, I would say blessed and cursed with volatility. Stablecoins have been always a product market fit. And I think it's been one of the most important use cases for crypto in general. What I really do think that's there from other incumbents is transparency. I'm not able to tell you. I can't use an API to tell you how much Tether actually has. And I can't tell you the same with Circle. And I think that transparency is important for users because they don't want to get rugged. And I get it. And I think the most important thing is user transparency, and security is a very important thing. And there are pros to decentralization. There are pros to decentralization, but you can scale more effectively at the earliest stages to front load your growth and sort of kind of keep those economies of scale if you have these kinds of decentralized fashions. There's a lot of capital intensivity with the centralization process. Us being a little bit more sort of, focused more on delivering a product is really what's the benefit to these kinds of decentralized applications. But for the most part, I would say that, our real focus is we focus on one asset, one blue chip asset. It's the most trusted asset in the world. You could swap any asset. You could swap your meme coins for USDC and USDT, but that muddies the pile. We're Bitcoin. I think the real thing is that people have been waiting for a product like this for a long time. People have been waiting to use their Bitcoin for quite a bit. And you see this with the thesis with Ethereum. Ethereum's thesis was a programmable Bitcoin back in 2015. They were pitching that like, hey, join our ICO, we could allow you to do whatever Bitcoin narrative was, but now you can build companies and protocols and applications and an internet on this. And people were like, let's do it. Yeah. But now in the last 7 years, you have, I would say even more than that, right? It's almost like, close to, 9, you have seen a renaissance that's come with Bitcoin. And now you've seen a migration from Ethereum back to Bitcoin. And that's just because we've laid a lot of the groundwork to set the success up for the Bitcoin ecosystem. There's a lot of noise, there is, but I think the real benefit is that Now you are having people enable programmability on Bitcoin just like how they always wanted. And now you can do it in a trustless manner that only enables Bitcoin liquidity, but also enables scalability for you to create an internet of products on Bitcoin as well.
Yeah, Bitcoin DeFi is a real thing. And I think, we always say this, we're early, but people don't realize how early we are, I think, with this narrative. And more importantly, the functionality of Bitcoin in the context of DeFi. But I think that's a different discussion entirely. I mean, I think we could probably discuss Bitcoin DeFi for days. Just in terms of Bima and what you guys have obviously achieved, with Core, I do believe that you've had a stealth launch. Is that correct?
Yes,
Has there been a TGE event? Tell us about kind of like the business side of things, because people are always like wondering. So where does the value lie for us as users and as investors? So yeah, give it to us.
absolutely. Yeah, we had a testnet launch. We're just kind of one thing that I think is the most important thing for a crypto product is user experience. Always, it's user experience. That's one thing that Web 2 has been able to nail down every single time that Web 3 to this day has just not been able to enable. I think enabling that was one of the most important things in my priority. I wanted to build a product. So right now you could go to Bima.money. We have a bunch of test nets available for you to just start trying, simulating, giving us feedback in our Discord so we can make a better user experience for you. Because people don't realize this, but user experience is the most important thing. Security is number one in crypto, but user experience is the second most important thing. If you don't enable a user experience, everything else is irrelevant. And I would say the crypto people are very adamant. They were like, I don't care if I have to memorize, 24 seed phrases. I will use this product so I could get money, which is awesome. But that's not going to enable you for the rest of the world. And I think that's something that we really want to emulate, which is something where people can come in, boom, I connect, I'm ready, I can just get a good flow of funds. So we have our testnet open. We're looking for I'll just say this, just to tease it, but our mainnet is coming extremely soon, extremely soon. Core will be one of our initial launch partners. In terms of TGE, we want to focus on delivering the product first, and then we'll be listing on some exchanges in the future. But TGE is going to come relatively a little bit after our mainnet. That'll also be available on Bima.money. We have our points program available. I was a big Zelda fan when I was growing up, and I always loved these kinds of sort of rewards and points programs. So you can join our points program and start following our socials. You can start testing out the product, and you'll earn these things called masks. So my favorite Zelda game growing up was The Legend of Zelda Majora's Mask. And just the level of sheer content. The main quest, by the way, was not why you played the game. It was the side quests. And that's why I wanted to sort of integrate that into this sort of a
Cool.
product is that the main quest is pretty simple. I take my Bitcoin, I borrow against it. That's stablecoins. But now I think the real focus that you've seen, a lot of people like to incentivize the yield component, which is there's a trilemma for stablecoins in the world. It's TVL, it's yield, it's utility. And when people index the TVL and the yield, you see the long tail and short tail ramifications of both. However, I believe that we need to incentivize the utility component because delivering a product that delivers actual yield is going to be extremely crucial and important. But delivering a product that can enable you to keep the longevity of usage, using for payments, using USBD to back an AVS, using USBD in use cases that you probably haven't seen before with other stable assets, that's what you need to incentivize. And that's really what we're focusing on is that we want people to be using USBD for a long time to come. We can listen, yields, product, TVL, all those different metrics they go out the door because at the end of the day, you just want something people use. And if you incentivize the points program with utility, people will stay a while. But the moment they get their yield and the airdrop is in, they're out. It's the same way why you do a free trial. Okay, let me try this out. Wow, I really like this and I think I need this. All right, let me subscribe and stay a little bit longer. So that's really sort of the biggest thing is that we want to incentivize people to enjoy their user experience so they stay a while longer. That's one thing that's super important in this space, whether it's next January or when we launch, or the Januaries after that. The longevity problem in crypto needs to be solved, and I think that's completely done when you incentivize the utility over the yield.
Lessons learned from Hyperliquid and what they did over the last couple of
Yeah, definitely. I think Hyperliquid is super important. I first started hearing about Hyperliquid in May of this year, and all the traders were telling me, like, dude, why are we going through Deribit? Why are we going through this? Why are we going through that? Just put it on Hyperliquid. I even reached out to the Hyperliquid team. I was like, please use use USBD as collateral, man. I see so much hype happening here, and the way they did their airdrop was absolutely fantastic. The airdrop was so good. The Solana maxis are going crazy. They're like,
Okay.
if it's not open source, it's not DeFi. And honestly, I could care less. I mean, I don't care if it's CeFi or DeFi or whatever it is. They built a really good product that people are using, and they've incentivized people. I mean, they had what, a $4.3 billion market cap.
I
It's
know, it's
just
insane.
absolutely fantastic. And I think their airdrop is, I mean, you can hear it from people who are smarter than me. You can hear it from people who are not as smart as me, or not even, I'm not as smart as, whatever it is. Everybody will tell you one thing. This is one of the best executed airdrops in crypto, but I will stay reserved. I just want to see what is the longevity of this, because, I want to see what happens with the usage the moment the points sort of get distributed. But they did lovely. I think they did wonderful.
Yeah, I mean, I think it's just comes down to, I think, the having a plan, executing it, incentivizing correctly from a points perspective, and then hopefully the product has been fit correctly to the market, and then they obviously get a whole lot of volume through this whole thing, and they keep it interesting. I think that applies for pretty much any kind of products, no matter it's Web 2, Web 3, secondhand car. It doesn't matter. The point is that you've got to create that desire for people to use the product, and I think that they did that initially because they made it appealing from an FTV perspective, low
They
FTV.
did.
Yeah, so all of those kind of things really did play into it, and I think it's really interesting, or it's going to be interesting to see how you guys launch. Like, did you learn any lessons from that? I'm sure you did, and I'm sure maybe you consciously or subconsciously going to land up doing things that might be a little bit different. But the point is that I think the meta is going to change from an airdrop perspective and an incentivization perspective. I love the fact that you're gamifying this whole thing, and that you do have kind of like this gaming perspective on it, because that's what makes it interesting, right? And if you can do that with the community and you can get the community buy-in, that's probably as important a product market fit as the product itself. So good luck with that.
Yeah.
And I also love the fact that you guys aren't doing a TGE straight off the bat. I find that one of the big mistakes in this industry is that people are just too eager to launch a token, and they don't really think about, like, where does the value reside within the token, and how do I actually carry this tool, because a token should be a tool beyond just making a whole lot of money and sailing into the sunset. It should be a tool that incentivizes and grows community and product, and we don't see enough of that. And what I like about Core is that they've used their token as part and parcel and center of what it is that they want to do within the ecosystem, incentivizing, rewarding, validators, all that kind of stuff. I think that's super important, um, for this year, and then for the next 10 years and 20 years ahead. So, yeah, good luck with that. I think that's probably the hardest part of this whole thing, means,
Longevity.
yeah,
Yep.
longevity. Absolutely. So, what is your sales pitch for Bima? Like, if you're sitting down at a dinner table, or if you meet somebody and it's kind of like even just a normie, I mean, it's like, how do you essentially sell this thing to them?
Yeah, the one thing I love about Wolf of Wall Street was sell me this pen. That's a
Yeah,
very
that was epic.
famous sales
I
pitch.
agree. It was so good.
Um, the biggest thing I would tell people is stop frameworking Bitcoin like it's Bitcoin. give it to people who understand how it is. What if you could borrow against your house? What if you could borrow against your house? What if you could have all this jewelry you're sitting with, a bunch of gold? I come from an Indian family. My mom wears this stuff. You can't wear your Bitcoin, unfortunately, but my dad like scratches his head. He's like, what's the purpose for all this? Imagine you could borrow against that and use it in some way, shape, or form.
Mm.
Creating a sort of use case for liquidity out of stuff that isn't liquid. That's the whole component. And Bitcoin, of course, is quite liquid. But I think the sales pitch is if I were to cross a Michael Saylor, if I were to cross any of these huge whales like Novogratz, I would tell them, imagine you don't have to give up your Bitcoin and you can still spend it in however way you want. You can earn yield on it. You can use it to buy anything you want, a house, rent, remittances, pay your employees. You could even use it to back the future of all these different types of middlewares. A majority of ABSs that we're chatting with, we're actually hoping and will be working at launch that USBD, which is our main stable, will be used as collateral to have actively validated services manage the future of all of these different types of connectivity on the internet. I think that's the most important thing is we need to, the sales pitch is simple. Earn yield on your Bitcoin by borrowing stable assets against it. That's it. I think a lot of people are like, I'm in right on that. Because if I'm a mining, rig institution, if I'm somebody that mines Bitcoin, if I were needing to pay for my electricity bill, if I need to pay for my house, if I need to pay overhead, if I need to pay any kind of cost, I can't go to a bank and borrow against my Bitcoin. I can't do that. I have to use my ASICs, my mining rig, up as collateral. But even though the mining rig might be worth something in hardware sense, it's not equivalent to the value. Like, you could have like $1 billion in a mining rig, but it's still going to be valued at whatever the hardware cost is. And that's it. That's really it. So I think the biggest thing is now what we're doing is you don't have to put physical hardware up for collateral. And then there's also a seizure issue. Okay, let's say what happens if you can't pay back your loan? Or is the bank going to come in and take a mining rig? What is the bank going to do with a mining rig? There's going to be a lot of different types of just logistical issues. The simplest way is this digital lending component. Rather than pricing on your hardware, price it on the digital goods that are in your hardware, which is Bitcoin. So seamlessly, no KYCing necessary. In many cases, if you're on Bitcoin L1 itself, you don't need to bridge. You don't need to give up custody. You can essentially borrow against it in a typical CDP fashion, and you'll be able to use it to pay for all your bills. I think that's the use case here is that, what is the real value of Bitcoin? Who is the real sort of, like lift, I guess, or, the atlas, if you will, for Bitcoin? It's not necessarily the whales. It's not institutions. It's the mining organizations. It's the miners. It is. They are the ones that uphold Bitcoin. They are the reason it exists in the first place. So appealing to them, it's important to look at institutional volume, whatever, but it is extremely important to also cater towards the needs and necessities of people who have been finding a way to do this, wanting to find a way to do this forever and give it to them at good rates. So that's really the pitch. Our target customers are people with Bitcoin, of course. I don't think it's worth our energy or breath to go to Wall Street or anyone else who doesn't have Bitcoin and basically say, oh, here's why you should be in Bitcoin. The simple case for what I would say to people who don't have Bitcoin is, why are you stupid? That's what I would say. But the simplest thing is, what if you could have an asset like gold that you could borrow against?
Mm.
That's what we're doing. And now if you enable that with Bitcoin and you enable that with these different types of parties that we're engaging with, namely institutions, mining organizations, and different types of treasury groups, perfect. And if you're an ordinary person with retail that wants to borrow against it, perfect. So this is really the whole purpose for what we're doing. It's a very simple use case, but simplicity sells.
Jan van Eck was on a Spaces with Michael Saylor think it was about a week or so ago, and Jan van Eck asked Michael Saylor, so what are your thoughts around, the volatility and the price when you buy it? And he's like, I just don't understand why people keep on selling it to me at this cheap price. Like I buy it and I just think, are these people stupid? They're like selling it to me and I'm buying it and they keep selling it and I keep buying it. And I see that he actually bought a whole lot more on the weekend, another 1.5 bill, I think. And it's
Oh
like,
yeah, let's just hope we could
anyways,
get to like 100K. That's all I'm waiting for, man. I mean, I'm like, when is some whale gonna put a big liquidity drop into this pool and
I
just
think they
finally go
tried.
past those levels?
I think he tried. I think he tried the last couple of days. And I mean, that's why it actually moved the way that it did. But it'll get
It's
there.
good.
Don't worry, dude. It's getting there. Relax.
It'll get there.
Patience.
I'm confident. I'm confident.
Okay, so I think just like the whole. I mean, it's all fine and well that you conceptualize an idea and you guys build it and
Yeah.
all that. What have been kind of like the big challenges for you guys? Not necessarily around the building side of it, but more kind of like delivering the idea and getting people to actually like be accepting of the idea. And the reason why I'm asking this is a lot of people don't want to give up their Bitcoin, and it's a question that I ask a lot, on the show. And it's like traditionally Bitcoin holders and Bitcoin maxis have been like, don't go anywhere near my Bitcoin. I'm going to self custody it, and it's like one of the pride and joys that as Bitcoin maxis we kind of hold true. I think once you've played in the DeFi context of EVM and the rest of it, you become a little bit more relaxed. But I think ultimately Bitcoin is that the separator, the determining factor. How do you address that kind of thing? And then what are the challenges have you guys had around, people obviously giving up their Bitcoin in the context of, do they hand it over and then use it as collateral and then take out the stablecoin? How does that dynamic work and how are you guys addressing that kind of mindset?
Yeah, absolutely. I think the whole thing is that we have Troves that manage that. So one of the biggest issues that we've had, you need to sell this idea. I think the best CEOs are sales engineers because they know how to build a product and they know how to sell it as well. And I think that's one of the most deadly combos you could ever have in the world. When it comes to something like a Bitcoin, right? Our vaults are structured in such a way that you don't actually have to give up custody of your Bitcoin. It's a trove that allows you to basically keep a collateral pool and borrow against. You still hold the Bitcoin within your reserve and your own wallets. You can liquidate at any time. I think the biggest thing is we enable this different types of redemption ability, really coming together with your stable assets. So we follow a very simple sort of Prisma design. I think there's a degree of custody that's necessary for I think once there's a collateral, we focus on a minimum collateral ratio. So the moment that the collateral drops below a specific price, your Bitcoin is returned back to you, and any bad debt is recirculated amongst different troves that have healthier sort of, standings. The most important thing that, we've had difficulty with is communication. And the second thing that I think we have the biggest difficulty with is, you know, we want to, this is a crowded market. And, I think the biggest, difficulty that we've had, I wouldn't say a difficulty. None of these are difficulties because I think we're doing lovely with our amazing team. The biggest uphill battle that we've had is how can we prove and show to others, where do we find the people with Bitcoin? Where do we find them? You could find a lot of them. they're everywhere for sure. But at scale, where do you find the people that have huge order books for both the institutional side, but also the retail side? I think when you look at something like Maple Finance, they were just purely institutional, and then FTX screwed them over, and their token went through the mud because they had like 20 institutional buyers. Now, I think that if you're going to be making a product, you need to have a good balance between the two. So finding the route in which there's institutional demand for this with Bitcoin, people don't want to wrap necessarily. So what we like to do is we sort of like to, I like to call it like we're setting up a stall outside of the campus. What I mean by that is we kind of go to where people already have existing liquidity, whether it's an EVM, Solana, whatever. And if it's Bitcoin, great. people who have set up shop and people who are students, I guess you could say, imagine you're on a college campus. Students are walking out, they see these stalls, they want to buy something. That's exactly what we want to do. We want to sell basically like, you kind of want to, I mean, picks and shovels is a good analogy, but before the gold rush, but that's exactly what we want to do. We kind of want to go to people that already have Bitcoin in some degree or form. So I would say the biggest uphill battle has been sort of trying to find out, well, listen, we are going to cap ourselves at some point with our own network. We want to find the friends of friends that really grow this to a huge degree. Imagine you go on Robinhood and you'd be able to borrow against your Bitcoin if you have custody there. That's awesome. Imagine if you're in some sort of retail platform where Bitcoin is a high volume, high demand asset, and you can be able to, without selling it, having to be able to borrow against it and use it however you'd like. That's the real thing. Is that as much as we like to focus on the institutional side for the TVL and yield and whatever, retail is the most important thing in terms of people who actually enable the utility. Because a stable coin, and this is a problem, I would say a problem. Athena has $100 million in the bank. I don't think it's necessarily a problem. But Athena's main uphill battle is they figured out the TVL, they figured out the yield, but who is using USDE and SUSDE? That's the main component that I want to figure out, which is we really want to hammer down on the product, the actual utility. So I would say that it's really more of a sort of this is just I don't think that when you're looking at the next gen of DeFi protocols, everything's been done to death. Hyperliquid, all these stuff, they've been done before. It's only thing that's going to make you good is execution, business development, and scale. That's the only thing. I don't think the tech is going to be that drastically different. It's going to improve marginally, a little bit less so than it has over the past 7 years. But I think the tech is not going to make the DeFi protocol any better. But if you have a killer team that knows a friend of a friend, that's what's super important. And I think that's really the biggest thing that we have had to deal with is that we know, we know a lot of people that can help us with the TVL side, but now we need to figure out how do we position this and market this and productize this in front of the retail side. We want retail to come in. Retail is the most important thing in this space. At the end of the day, institutions are like 2% of whatever is really necessary. But enabling the ordinary user to kind of come in and borrow at the same way that Elon Musk or Jeff Bezos does against their own shares, that's super important. But yeah.
Cool. Good luck with that mission. I think as we navigate this narrative and we become less early, if that's actually the right way of putting it, I think it becomes easier and it becomes an exercise in trial and error. I mean, that's why everyone trusts Aave, right? Is because they've been through the motions, and the same will apply to you guys. It's really that simple. Absolutely. You need the time, and you need the time in the trenches as well. And I think that will just play out accordingly. So yeah, it'll be interesting to see where you guys are in a year, 2 years from now. But I think you did describe it quite well early on, that you do have great support from the core side of things. They obviously do have great contacts, and I think there's deep liquidity there as well to tap into. So maybe they'll come to the party with their contacts at some point, which I'm sure they will.
They will. Yeah. They will. They will.
So I wanted to just close off with kind of an opportunity for you to give us kind of like a rough, won't hold you to it, but just like a kind of rough outline, in terms of what your roadmap looks like. And I know that you did mention your testnet at the moment, and then Mainnet's coming soon. And then are you guys planning to release a number of products at the same time, or are you taking small steps around that once you've gone into Mainnet and then final launch?
Yeah, great question. I'll give you the timeline. So I believe that if you're building a stable coin, you need to create a very, very good atmosphere around yourself. Apps, utility. That's the number one thing. That's what Athena's doing. Athena's making an L2 for themselves. And they're just bringing people to them so that they could force them to use SUSDE or USDE. But if we create our own applications that people can find those utilities with USBD, then we become a real good winner. But we focus step by step. I think the main priority right now, make sure USBD is positioned for success. So what you're going to see in January, February, you're going to see likely a mainnet, which is going to come with our initial lending module, where people can lend and borrow USBD with several different types of ecosystem-based liquidity. So I can borrow from USBD. I can put it in different liquidity pools and earn a good degree of APY depending on these liquidity pools and provisioning. I can do it for liquidity pairs or whatever. I can borrow and I can use it somewhere. Somewhere down the road, I would say Q1, Q2, you're going to see our structured products vaults. So we're not just sticking to the delta neutral. I don't think just sticking to one strategy. The delta neutral works because it scales at billions. But there are so many other strategies that also scale at billions that can give you equivalent, if not more, yield than the delta neutral. We're actually working to build our own structured products with a sort of our own strategy managers to help people be able to get different types of reward and risk profiles based on what they like. A lot of people don't like the delta neutral because it shorts Bitcoin. You don't need to do that with some of the other ones. The gamma neutral can earn good, the rho neutral can earn good. These are things that can scale at high degrees and earn you some good yield. Um, I think the biggest narrative that's happened, especially with the recent election, and now you're going to see this with, I think the next generation, is you're going to see a huge narrative shift around inflation. That was the OG narrative that was there. It was the reason Bitcoin was created, which was something that is non-inflationary, something that isn't controlled by banks, something that isn't controlled by a government. And I think you're going to see that mostly in Latin American countries for adoption. People that are finding ways to maintain their wealth. When I worked for Draper Associates, there was a family office that was a millionaire 3 times. Each and every single time they became a millionaire, they lost their wealth because of the inflation in Argentina. So people are going to want to hedge their wealth against inflation. So sometime around next year, you're going to be seeing a flat coin product come out. People will be able to bring their Bitcoin and output an asset that basically preserves their wealth from month to month changes in CPI. So let's say the Argentinian CPI goes up, by, 30% in a month. We'll actually burn the supply by 30%. So we actually allow people to be able to preserve their wealth in modicums of benefit. So as they have more and more people come in to back Bitcoin with Bitcoin, now it's a modicum for them not only maintain but also grow their wealth. And I think the flat coin scene is quite low and dead. But imagine you could take Bitcoin or USBD or other currencies and use that. So what you're going to see within the next, I think, Q3, Q4, you're going to see currencies other than USBD. I think, like I said, there are 3 important pillars of an economy. It's lending, borrowing, it's yield, it's currency exchange. And I think when you create that, then you focus on what should an economy, rather than what makes an economy, what should an economy be? And that's inflation protection mechanisms. It's remittances. It's enabling, backing for yield. There's a huge layer. It's debt structures. It's structured products. That's really what an economy should be for everybody. I think our main focus will always be creating products that people like. So I want to have USBD. I want to be able to lend it and borrow it. I want to be able to earn yield on Bitcoin with it. I want to be able to transact it and change it for different currencies all over the globe. I want to protect my wealth from inflation. This is what I think is important. And you're going to see this for the next year or two, a rollout of these products. Our main priority, of course, is scaling USBD, but our vision is very focused on making an economy backed by Bitcoin as an economy should be, and dreaming and actually enacting what an economy should be with Bitcoin as the main base layer. But that's the vision. That's really the scope. I think we're really excited to execute, and we really want to hear what people have to say to use the product, but also what do they think an economy needs. And I think that's really a lot of there is that there should always be something to build. There should always be something to build, someone to service, and that's something that we can build within the context of a stable. And I hope I made stable sexy again. I just hope I did.
Well, yeah, you did, because it's a very, I mean, like we said at the beginning of this discussion, is that it's kind of like, without it, you can't really grease the wheels. It's really that simple. And people don't want to sell their Bitcoin, but if we can collateralize against it, then, in a safe way that doesn't actually threaten the custody, which this is what you guys are doing, then it's a no-brainer from my perspective. So where do we find you guys? It's Bima.money, correct? And then,
Yeah, you can find us on our website,
cool.
Bima.money.
And your Twitter?
My Twitter is right here. Let me see if I can do this right. Yeah, there you go. Okay, perfect. My Twitter is right here personally.
Cool.
You can follow us on Twitter at BimaBTC, BIMA BTC. And you can even we're at Bima BTC everywhere. Telegram, on
Nice.
Twitter. We'll be everywhere. We're at Bima BTC. So anything
Cool.
that you think we should be, please let us know. Oh, you should be on I don't know, TikTok, but I don't know. I don't think that's going to be any use there. But we're at Bima BTC on the relevant platforms for discovery and our product.
Cool.
But please follow us. We're super excited, and we hope you could start using us. And thank you so much for having me on here, Jedi.
Yeah, so thanks a lot. Love your passion. Clearly in it for the love of it, and it's very obvious. You do wear your heart on your sleeve, and it's great to see. And yeah, thanks for joining, and thanks for the great answers. And yeah, wish you guys all the best. And maybe we'll get you guys in, in a few months' time, and see how things are going. And yeah, take
Absolutely.
it easy. Yeah, it's been an absolute
Awesome.
pleasure. And yeah, thank you so much for joining us.
Thank you so much for having me here. Really appreciate it. And thank you again to the core team.
Thanks, guys, for joining on another episode of A Blockmates Orange. Please like, subscribe, all that good stuff, and we'll see you guys next time. Take it easy.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Like and subscribe.